Hey my investing friends, it's time for our May income update of our $123,000 Tfsa dividend growth portfolio. We'll also look at our dividend raises this month. Let's do this. As usual, before I jump into who paid us and how much, let's glance at our portfolio's dividend calendar for those new to the channel. January, April, July, and October are the big months. And February, May, that's this month, August, and November are really small. The other months land somewhere in the middle. In May, we received dividends from the following 4 monthly payers. We'll go through each paycheck we received, adding up our totals along the way, starting with the smallest payer, not paycheck. First, we were paid $23 from our one closed-end investment fund, Canoe EIT Income Fund. It provides us with 3.7% of our yearly dividend income. EIT has a great 5-year return, much better than the S&P 500 as you can see. It is holding up well in this market. Let's see how long that lasts. In any case, this will continue to provide us with a smaller percentage of portfolio income as time goes on until it's finally sold. Before we look at our next paycheck, if you could kindly smash that like and subscribe button. If you're into dividend growth investing, of course. There's a lot of content coming up in the pipeline that you won't want to miss. Next, we were paid $48.50 in distributions from Smartcentres Real Estate Investment Trust. They provide us with 8.1% of our forward annual dividend income. They're trading above their 5-year average yield of 6.2% at a yield of 7.3%. Smartcentres has a 5-year dividend growth rate of 1.6% and shrinking, since they haven't increased dividends since 2019. Their AFFO payout ratio remains high at 89%. The Bank of Canada is scheduled to announce the overnight rate, i.e. the interest rate, at the beginning of June. If it holds steady, this should climb. If it is raised, the rug might be pulled and that yield will increase. With this monthly distribution, we're at $71.50. For our third paycheck, we have our monthly financial payer, First National Financial. We received $50.40. FN provides us with 8.1% of our annual dividend income as well, but slightly more on the year than Smartcentres. It has a yield of 6.3%, which is 10% higher than its 5-year average of 5.8%. It has a 5-year CAGR on its dividend of 5.3% and has raised dividends for 11 years. I see them continuing that streak with another raise come the end of the year, provided the payout ratio stays in the 70% range. With that monthly dividend, we cross $100 to $120.90. And lastly, the heavyweight holder of our portfolio, RioCan Real Estate Investment Trust. They paid us a distribution of $64.80 this month, after dripping 2 shares last month. It provides us with a massive 10.5% of our forward yearly dividend income. This has been slowly coming down as we max out our TFSA. When fully built out, it would drop to around 8%. RioCan has a 5-year average yield of 5.8% compared to the current yield of 5.4%. RioCan has now raised its dividend 2 years in a row since it cut the dividend back in 2021. With a very modest payout ratio on AFFO of 59%, we know what will happen next year. Oh yeah, baby. So after our 4 monthly payers, our grand total is pretty tiny, $186.70. Our 3 largest dividend payments accounted for $163.70 or 87% of our dividend income for the month of May. With only a few monthly dividend paychecks this month, the number's artificially skewed. We've built the portfolio with a focus on the quality of the companies and the dividend growth. We also never want to be too dependent on any one company to help the portfolio grow in the event of a dividend cut. As you can see from the portfolio breakdown, no one industry or stock dominates our dividend income. Now, a massive part of our dividend income growth is from the raises we receive, and May has 3 dividend increases to report. First, Pembina Pipeline increases dividend 2.3%, bringing its streak to 2 years. This added $10.14 to our annual dividend income. I'll take it. Second, Bank of Nova Scotia increases dividend 2.9%, bringing its streak also to 2 years. This added $19.56 to our annual dividend income. Now that's more like it. And lastly, TELUS Corporation increases dividend 3.6%, bringing its streak to 19 years, and that's the second increase in 3 quarters. This added $13.02 to our annual dividend income. That's a total of $42.72 of annual dividend growth. That's like adding almost $1,100 this month at a yield of 4%. Gotta love dividend growth. There were also some other notable dividend increases this month. Imperial Oil had a massive 13.6% dividend increase, bringing its streak to 28 years. Loblaw Companies had a good 10.1% increase, bringing its streak to 11 years. George Weston had an 8% increase, bringing its streak to 11 years as well. Hydro One had a 6% dividend increase, bringing its streak to 7 years. Finning International had a 5.9% dividend increase, bringing its streak to 21 years. CT Real Estate Investment Trust had a 3.5% dividend increase, bringing its streak to 10 years. And a ton of financials also had increases. Equitable Group Inc., or better known as EQB, had another 5.7% dividend increase. That's 2 in the past year. National Bank of Canada had a 5.2% increase, bringing its streak to 13 years. Sun Life had a 4.2% dividend increase, bringing its streak to 8 years. Canadian Western Bank had a 3.1% dividend increase, bringing its streak to a massive 31 years. BMO had a 2.8% dividend increase, bringing its streak to 2 years. Canadian Imperial Bank of Commerce had a 2.4% dividend increase, bringing its streak to 12 years. And lastly, Royal Bank of Canada had a tiny 2.3% dividend increase, bringing its streak to 12 years. You probably noticed the only Big Six bank to not increase its dividend was Toronto Dominion Bank, or TD Bank. Our forward annual dividend income is sitting at $7,452, down about 15% from last year, with a yield on cost of 7.3%. We still have a lot of cash to deploy this year, despite dropping a ton in May. You'll have to check out our May portfolio update to see how much and what we were buying. Stay tuned, guys. What is your guess on the 3 new holdings we added to the portfolio? Anyways, as we get closer to maxing out our TFSA again, we expect our dividend income to snowball faster. Those that follow our channel know that we see our dividends as our little minions that work hard for us so we don't have to. With our minions working harder and harder each year, we can forecast where we'll be in about 10 years. Thank you so much for all your support on the channel and on Blossom Social. Until next time, I'm Mr. Financial.